Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. Kicked off the week in style with a lovely Monday of trading. This morning, our S&P is up 32 points. We're up a little over 1%. NASDAQ is up over 100 points in pre-market trading. We're seeing gold down just a little bit and crude oil getting a little bit of a recovery, but we're recovering right smack into areas of supply. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you are a returning visitor, take just a second, hit that little thumbs up icon down there. Come on, I know you want to. I appreciate it. Thank you so much. Real quick announcement. A couple of people have asked about this. We are doing a trade review session Saturday, May 2nd at 8 a.m. Central. This is a live session, so you can come and bring your trades. We're going to review members' trades and open this up to anybody who wants to join us. So Saturday morning, 8 a.m., go to tradersarmy.com/live online. Feel free to join us. No membership required or anything like that. We'd just love to have you join us as we go through some of the ways that we look at trades in the market. Okay, let's move on. So the S&P this morning, we are up 31 points this morning, and we had a nice breakout trade yesterday. So a couple of people I know, we caught that breakout trade, got a little run out of it. Our trade update at the end of the day we put out was designed to really get everybody to realize that we rallied up, had a little bit of a slow move, and at the end of the day, we knew, okay, the markets are about to close. It doesn't make sense to hold this thing any longer. So one of the things that we do is we update our DMC trades, our daily market commentary trades. So ES long breakout, as we near the end of the day, it makes sense to take profits before the close. And the reason for that was because we really felt like we may get a pullback during the evening session, which is what we did. And so if you got that little bit of a pullback during the evening session, then you saw a little bit of those profits go away. But then we came back down into the origin of the breakout, which is a reversal trade. And so for those of you that caught that reversal trade on the return of the breakout, we got a really nice run from that position as price rallied off of that level and then it's come into our next breakout level, and we've just recently gotten a good move off of that. If you missed that breakout level as well, which we've had two really nice breakout trades in a row, then you're probably going to want to look down into right about here, which is right at the European market open, for a pretty quality reversal opportunity. Same picture is in the NASDAQ. We broke above our NASDAQ level in the overnight session. Once again, a little bit of basing before there. But if you missed it, look for this European market open level right down in here as a potential reversal. We don't oftentimes see those reversals come back in and get retested. So keep that area in mind if we do come back into there later today. I think that's a really fine reversal point. Once again, basing there above 89.70 gives us another opportunity for a breakout. In crude oil, so crude yesterday continued its fall. A number of traders, as part of the Traders Army community, we took our gap and go trade in crude, and that ran all the way down. Very strong move. We've since rallied back up here in the last little bit to our reversal level and are starting to come down off of that reversal level, that 25. And so if you caught that level, you're still in that position. You've moved about 3-1 from that entry. Your target is going to be somewhere down in here at this 23.88 as your first target. I actually still believe that the better opportunities for prices to continue to fall. This would be our breakdown level if we get basing in front of this 23.35. Now remember, I'm using the September contract here, going out a little bit further in time. Yesterday, part of the reason why we saw this big sell-off was the reformulation of the USO which is the world's largest ETF, caused them to say that they're going to sell all of their front-month contracts. And so while the CLU took it pretty hard, the actual front-month contract dropped all the way down almost to the single digits. Didn't quite make it to the single digits, but fell almost to $10 a barrel. All right, Looking at gold. So gold, we had our demand level from yesterday. So if you got into this trade in the overnight, this trade is moving pretty well. We had a pretty nice arrival into the zone. Your first target would be this area right up in here, which is about a 2-to-1. So you've actually probably hit target 1 already. Target 2 would be this area right up in here at 1738. I think that's a really strong target number 2 for this position. If you missed this trade, this was really just a touch and go because we didn't trade halfway into the level. So technically we can still try it again, but it has to be a confirmation entry. Okay. This looks like a better opportunity only if it's a confirmation entry, which is kind of somewhere in between there. The next level that I would look at on a 4-hour tells me that I have slightly, I've got a fairly wide range, but it is still somewhat range bound. And so just be cautious on any trades that you enter in this positions, since I don't have any super clean levels to lean on at the moment. Next, moving into our bonds and currency markets. In the ZN, which is our 10-year note, we did get a little breakdown in the ZN trade. Price gave us a little bit of a move away in our 10-year note. We did come back up and retest it a little bit, but then got a much better sell-off into the overnights, and it's continuing its move down. So we're seeing the ZN breakdown working pretty effectively. If you missed it and you want to look for some overhead supply for a reversal, you have this level right up in here. And if you took it, then I would take your stop and move it to right down about here, which would lock in some profits. In our Aussie position, we did get a little bit of a breakout in that Aussie trade. We were based in front of that level all night. Aussie breakout occurred. Prices rallied up to the supply level, but remember, since our 4-hour is such a strong uptrend, the only way we can take this supply level is on a confirmation entry. And so we're not quite there yet. As a matter of fact, we're basing before the level. So since we're basing before the level and we'd have to get a confirmation entry anyway, I think the best thing that can happen is that it can drop us back down into here for a retest of a long position. So I'm going to remove that level for right now. In the euro, we did get a trade into our little euro level. Got a little bit of a move away, but this is another one that we talked about in an update yesterday, where we normally would use the 6-candle rule in this position, but I actually felt very weak about it. Our 60 reversal trade is 4 candles into the move and has not given much move. So in this case, before market close, it makes sense to move the stop to break even. So we definitely wanted to move our stop to break even in this position. As you can see, we came into there 1, 2, 3. That was 4 candles into the trade. If you didn't move it to break even at that point, 5, 6 candles later, you still had another opportunity to move it to break even. So now we have, since we dropped below there and have rallied up pretty hard since that position in overnight trading. And so now I'm looking at this area here, which is a wick over wick level right there that we have that's kind of been established. We have a smaller wick over wick level below, so your stop needs to go below this lower wick if you decide to take this upper wick over wick area. Canadian dollar, we got our strong breakout in the Canadian dollar, which was the expectation that we would get that breakout. That breakout occurred, but without the basing. So it occurred without the basing to allow me to enter into the position. So unfortunately, that happened. Now, it did move right through that supply level where I thought we may get a bit of a reversal, but the levels that we did break out from are still available for retest if we come back down into this region. So 71,297 by 71,397 is a decent retest. Now, this area up in orange above us, by the way, this was a flip area. This was a fair price value area. We saw wick over wick. Price hit it, got a little move away, hit it again, got a breakdown in here. And so I think that we could reverse at either one of those levels. And our 4-hour trend is technically it's up, but it's a fairly weak uptrend coming to 4-hour supply. So just keep that in mind. Last two markets, Great British Pound and Japanese Yen. In our 6B, which is our Great British Pound, we did get a nice little move away from that level. We got another touch into that level and then a very strong move away. And so I'm now going to remove that particular trade, as hopefully you're able to catch that one and get a nice little run out of that trade. And so now we've rallied up. We did blow through our breakout level, and we blew through the breakout level. Let me put this line back on. We blew through the breakout level, and the breakout level was then retested. We can see this lower wick right here retested the breakout level, and that breakout level was that area of resistance. So old resistance acts as new support in this scenario, which is kind of common. That happens a lot. So whereas I normally would use this as a supply zone, or excuse me, as a demand zone, I'm going to go a bit lower, and I'm going to go to this 15-minute wick over wick area that I have right in here. Very small level, but I think it's one that can be used for a pretty decent area of opportunity. And then the Japanese yen. Japanese yen, we rallied up, blew right through our breakout trade, but the good news is that it now opens up the market to be traded a lot easier. And so I've got a couple of levels of reversals. So big moves overnight as we're seeing weakness in the dollar. Lots of strong moves up in our currency markets. And what that tells us is that we have to, if you miss some of those breakouts, there's nothing wrong with missing the breakouts. Just wait for a reversal. And if the reversal doesn't come, allow the markets to set up for another breakout. I need to get the basing before the level for that breakout to occur. So if you have any questions, as always, send us an email, support@tradersarmy.com. I look forward to seeing you in our session on Saturday morning with myself, Corey Lane, and Justin Krebs as we break down our trade review. But until next time, stay safe. Hope everybody has a great day. See you.